I think if you went to like a traditional TradFi investor and you tried to explain like, you know, labs, governance, token, foundation, and kind of the hand wavy science that they're not all related and they're totally independent, like you'd be laughed out of the room, and within 5 seconds someone would be like, yeah, I have no interest in buying this. You know what I mean? Like we kind of like delude ourselves into thinking that it's normal, but I just like I don't know. I just don't think it is.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today is a very special episode. First of all, we have all of the podcast hosts, but more importantly, we have James Christoph, who's an avid podcast listener and an avid hater on Twitter as well. James, do you want to give a short, anonymized introduction of who you are and why you're angry, and then we can get into the podcast?
Thank you for that warm welcome. I thought it was pretty nice when I met you in person, but that's fine. I can have the hater moniker for the podcast. That's okay. Yeah, I've been in TradFi for the last 10 years or so. Mainly within the equity derivative space and also a little bit of structured lending. Been in crypto since like 2019. Pretty basic stuff, like mainly just, long majors here and there, and some yield farming stuff. Nothing like super exotic. But obviously love the podcast, so happy for you guys to have me on. I promise not to hate too much.
Very good. We're very happy you're here. And you say not very exotic, but the reality is that we don't really get a lot of tradfi faces over here, unlike Felix, which is all he gets. So this is gonna be a good episode for Xerox Research. I want this to be kind of a questions episode, mainly because I'm tired and it's very late here. But so I'm gonna start it off with, um, what are you all doing on chain in crypto, and how is everybody positioned, um, in terms of risk assets in general? And I can pick. Um, James, you can start.
Yeah, so I think me and Westy were actually pretty active in the chat, being angry bears for the last like 2 months or so, specifically within the 0x chat. Um, I think like one of the funny things about crypto is like it's still that one industry that gives you really hilarious and somewhat obvious top signs that in hindsight you're like, wow, that was really obvious. And then that happens like 10 times in a row and you still kind of kick yourself for like not following them, right? So like the Trump meme coin to me was like just the most obvious thing in the entire world. I won't pretend that I caught it completely, like completely accurately. I think I sold most of my BTC like probably average price of like, I don't know, 95 or 97 to me. Um but like going into it, I think Felix and Quinn did a super good job on this on their podcast, like pre-election, right? It was like you're trading around 60K and the huge narrative of Trump being a potential winner was like very mispriced at that point, right? So you had this huge election narrative of, and like we repriced that so quickly, right? Like within 3 weeks we were at whatever 90K, something like that. So like you had to kind of reevaluate how much of that was priced in and I'm going to get in trouble with this one, who's the marginal buyer post that. So I think really after Trump getting elected was just like kind of a sign to take a little bit of chips off the table. So in terms of me, like I'm sitting in a lot of cash right now, honestly, not doing much. I don't think I've transacted on chain in the last like probably month or so. Um, so kind of boring, to be honest, just seeing what's happening. Curious what you guys are up to.
Guys, please don't make me call out one more name.
I'll go ahead. I'll go ahead. I'll actually echo a lot of what James is saying. I think I'm in a similar camp as James and Westy here, where again the point about it being obvious after the fact, but like in that moment, I think that the Trump sort of event was a critical one, especially for someone maybe a little bit more degen, trading a lot of meme coins. I was looking at that, like, people were trading AI coins and fart coin, and then Trump coin drops and goes to 70 billion FDV. Um, and, I think, James, you made a comment in the chat maybe a week or two ago around like, you know, two trades basically making the bulk of all the returns for this, past 6 months or whatever. And I think that's pretty similar for me, just based on what those opportunities looked like. And I think I'm sitting in a similar place now where coming out of January to February, just more and more cash and less risk, less crypto exposure. And I think today, wanting to gamble, but sitting around and going, wow, it's really not that exciting. Buying some Ghibli token here and there because it's the meme of the day, but otherwise kind of touching grass for the time being. The weather's getting nice outside, so just enjoying it.
Well, I won't toot my horn too much, so thanks for doing that for me, James. But yeah, I got pretty bearish in December. I won't get too deep into the macro on this episode because for once I can just talk pure crypto and degen stuff, which is exciting for me. So, but really, there was a pretty big tonal shift in the Fed in December where they were pretty much hell bent on being somewhat complacent and slow to react to what I felt like was a slowing economy. At the same time that it felt like marginally way too much excitement and expectations were baked into the BTC price post-election heading into inauguration that it was just impossible in my mind for the reality to live up those expectations. So yeah, I got a lot off my book at that time. Been mostly hanging out in cash, but I'm starting to buy a few things slowly over time here right now that I think I'm willing to hold another 40% lower. 40% lower, knowing that in a couple years, I think it's going to do really well. And really what I'm focused on is stable coins. I've been kind of joking that I just feel like Thanos right now, trying to gather the infinity stones of stable coins. But yeah, I've been buying on the open market, Aave and Maker. I just saw, I'm sure we're going to talk about this, but Circle's going to IPO. Pretty excited about that. A couple private things, but really I'm just focused on stablecoins. Really, super excited on that. Buying a little bit of Bitcoin, still pretty cash heavy, but slowly making my way back in, but with a pretty long time horizon and knowing that it's going to bleed some more here. Like I'm not interested in buying on perks or something and just eating up on funding. But it feels like a time where it's time to slowly start thinking about some longs, but definitely don't need to be in any rush.
Ryan, please give me a bull take, bro.
Hey, that wasn't that bearish from my part. Come on, I could
Yeah.
have been the macro doomer here.
Bull take, yeah. I mean, I think there's a lot of really exciting things in the market right now. I think some of the lenders are super cheap after this sell-off. I think if you want to go to the 52-week low list, there's a lot of like really good fundamental names in there that have strong moats. I think we're in this very interesting point in the cycle, or sorry, not the cycle, like the history of crypto, where for the first time you kind of like have the floodgates open on capital, and like you can actually start thinking about the incumbents and compounding their leads. There are incumbents in the lead with real teams who like aren't scams, who don't want to sell their tokens and leave, who actually like are in Washington pushing policy and like cementing their lead within the crypto space. Like, I think that that's super exciting because it's potentially one of the easiest crypto kind of like macro environments, so to say, where you can actually just buy a token and hold it for a long period of time, given like that those kind of tailwinds. So yeah, super exciting. We like it when prices are lower, and like, what is it? Nvidia's like 30% off the high, Meta's 20% off their high. There's a lot of really good names that are finally giving you that chance. And if you look at the long-term, history of risk markets, you get a 20% drawdown, you might go to 40, but 20 is really nice. And you perhaps only get one of those every few years. So yeah, I think that this is great for, fundamentals driven investors.
This reminds me of that old like Kobe up only podcast a few years back where he talks about the importance of, staying interested during the boring bits, which like kind of to me the last 3 months or so seems pretty boring. Like everyone got washed out. It's generally like kind of suicide mode on CT. So I think yeah, like right now it's super super important, even if you're not taking positions or doing interesting stuff, to kind of stay involved with what's going on. Because like as quick as that, the narrative can shift and we could be like back at 125K in a split second.
Yeah, people usually, I think, overestimate how long it takes for us to just go back up. They're like, "Oh, we need 12 to 18 months to resolve this." No, we don't. We definitely don't. Ryan, in terms of looking at these like assets, and everybody else, please also chime in. Do you think the buyer of these, because the buyer for Bitcoin has changed, the buyer for ETH hasn't changed. There are no buyers. Do you think the buyer for, I guess, like DeFi will change eventually, where it's more from, because typically it's very narrative based, maybe 3 months. That's like the time horizon. Do you think we're going to see a shift in, I guess, like who's buying these and why they're buying them and their time frame?
Yeah, because of where we sit in the market, we get to talk to a lot of funds on the liquid and venture side. And on the venture side, if you are an equity only venture fund, or sorry, if you're a private market investor, you're actually considering tokens right now for kind of the reasons I highlighted earlier. If you look at these businesses, they look like late stage growth or, growth businesses that you'd buy in the venture market. So people are considering tokens. They know the upside that they can achieve. And because I think some of these venture funds have really underperformed since 2021, I think tokens are probably looking attractive to them where they have LPs that might be getting a little impatient. I forget the name of the individual who does the survey, but there's someone who does like a crypto market investor survey where they basically like reached out to a bunch of LPs and they were like, hey, when do you think you're going to deploy capital? And this was like done shortly after the election. And they said summer of 2025. So, might not have been on the timeline of like typical crypto investors who are thinking in like sub 3 month increments. I think LPs are thinking longer term and they're going to allocate capital liquid token funds, and those guys are going to buy tokens, and it's going to impact the prices. So,
Do you really think that like VCs can get away with telling their LPs like, hey, we're gonna chuck 5%, we're gonna call capital from you and chuck 5% into like Aave and just hold it and whatever, stake it and get some yield?
yeah, I think they're already doing it. PwC did a study. I reference it all the time. It was in the depths of the bear in 2023, and they asked hedge funds like, what percentage of your book is tokens, and 33% had a non-zero allocation of tokens in the depths of the bear. So, like, tokens are on the minds of these funds. I don't think it's going to happen overnight. I think it's going to be a pretty slow burn. They're going to go to a 0.5%, then 1%, and then like there's some topping, like maybe they get as high as 5%. Like who knows? But it'll happen on time frames that I think most degens aren't comfortable with, but it'll happen for sure.
Yeah, I feel like the big question at hand here is, okay, if they're going to get in the front of things here and face this, train coming at them, do they decide to buy fully unlocked coins or coins where they're just the buyer of emissions from other VCs, right? I feel like that's the big question at hand, and I know that it feels like the question for a lot of people, right? It's just like, okay, do I come in and buy Hyperliquid, buy these DeFi coins that are fully unlocked, or do I try to get in front of the sexy new narratives, but then I also have to fight these endless unlocks? And yeah, I'm curious if you guys have heard like what side of the aisle they want to sit on for that.
I'm sure Ryan can have a better take on this, but I feel like I was seeing a lot more buy the unlocks style of deals where there's like, oh, there's an unlock coming up in October, and then they're just selling off that unlock. Versus now, I feel like I see a lot more people who are actively building out these like lists of, oh, I need to get into Jito, and or like, oh, I need to get into Aave. Although I think that's mostly anecdotal, and I'm not sure if that's exactly what it is. I do think there's been kind of a shift in how people think of tokens. Like when there's a bear, the emissions really start to feel like people can really start to feel the emissions, and like when there aren't any new buyers coming in. So things like Aave and Hyperliquid, like you mentioned, they look a lot better because the unlocks are less. The teams are, they just have like, you can sense that there's a different energy that the team of like Aave and Hyperliquid and God, I even shat on Aave last week, but like even they bring a better energy than someone like Movement does to their token and to their project. So I feel like the buyer there, um, like they can really feel that as opposed to what it has historically been, I think.
How much size are you seeing in that? Like for funds that you guys are talking to that are buying tokens, like how
We
low is the ceiling in terms of like actual capital you think that can be deployed there?
okay. We can't do size talk versus TradFi people because it's never comparable. Like it just genuinely
Yeah,
never
yeah, yeah,
is.
yeah, yeah.
No, I do think
Their
that there's
biggest
been a
funds are 3 billion in assets. Like it's not a
No, but
yeah,
that's a big
it
fund though.
doesn't
My point
compare.
is like I'm saying you can write a big check for like mega ETH or something as a frame of reference, like pre-product, but like it's more difficult for that same VC to just chuck that into like Aave, I think, and justify that to their LPs. Like I feel like that's a weird conversation to have. Like you're locking up capital for 10 years and some guy's like, yeah, I'm just gonna buy Hyperliquid like tokens. I don't know. Seems a little odd.
Oh, you mean on the venture side?
Yeah, exactly. Like venture side pivoting to like just buying liquid unlocked tokens. Like it's a weird value prop. Like I feel like the LPs would probably not
It
sign up to that. You know what I mean?
TradFi LPs, I totally agree. There is some pushback to that. The funds that I've talked to, they seemed excited about it. So I don't, I think it's on a fund by fund basis. We've also talked to ones that are lean more TradFi. So you can think of like some TradFi names in crypto that are clearly uncomfortable with mixing liquid and privates. So I think it's on a case by case basis. The interesting trend in crypto venture is that like a lot of these guys are spinning up liquid token funds now over the last 6 to 12, and they're getting the capital from somewhere, right? So, um, we'll see.
Sometimes I think something kind of, I don't know if this is illegal, but something slightly illegal happens where the VC fund ends up passing off some of their investments to the liquid fund. I don't know if that's allowed. I don't know. Like, I've just heard of one or two instances of where it has happened. But yeah, I have heard more and more that, well, I mean, I think you can also see this. Like, there's more and more liquid funds on just speaking their minds on Twitter. I like Anik, you can just see more and more participating versus before it was like purely VC diatribes. Now it's like people actually writing out investment theses and what they want to do and like on liquid tokens. Yeah, I agree with you, Ryan, on everything you said.
How do you guys feel about, like, I think a big factor at play here in the liquid market, especially with crypto today, is all of these governance coins. There's there's like this classic utility versus governance, but it's all like not really utility yet. Like I think we still have this issue of like labs versus DAO or labs versus, decentralized entity here. um, and that has to play into like a decision around any one of these. Like, what's the history of like the DAO versus the Labs entity? Who's like winning out in this arrangement? Do you actually want to buy this token because it's going to see the benefit of like the revenues of the protocol in the future, or is the Labs just like sucking this project dry? I feel like this has been like a bit of a hot topic maybe lately with some of the announcements around like the Aave and Avara thing. Um, Arbitrum and its gaming proposal from a while back. I don't know. What are your guys' thoughts there?
I think TradFi solves this. I think TradFi Capital coming into the space, those guys don't have the patience for this. So like if summer is that time frame when like sophisticated allocators get like, because I saw this stat recently about small venture funds, which I think most 99% of crypto funds qualify as, that they don't get their capital from allocators. They get it from people they know who got rich in technology. And that's a different LP base. It's much more risk seeking. It's they're checking far less boxes and they're demanding a lot less from the funds. So I think as that mix starts to shift in the summer of this year, if that survey is true, then the the funds are going to LPs are going to demand a certain level of competence from the funds, and then the funds are going to demand um, um, fewer conflicts of interest between equity and labs, or sorry, labs and token.
Yeah, I think if you went to like a traditional TradFi investor and you tried to explain like, you know, labs, governance token, foundation, and kind of the hand wavy science that they're not all related and they're totally independent, like you'd be laughed out of the room and within 5 seconds someone would be like, yeah, I have no interest in buying this. You know what I mean? Like we kind of like delude ourselves into thinking that it's normal, but I just like I don't know. I just don't think it is, and I don't think
Yeah,
people
but they
would
also make
view
buy
it as
side
such.
and sell side research walls feel normal too. So they're
That's
guilty
true.
as
That's
well.
true. That's very true.
I will say this isn't really our fault on the crypto side. I think this is probably due to overregulation over the past 4 to 5 years, and it's not like this. Um, I guess utility stuff, all of that, I think is just related to mismanagement from the regulatory side. I think I agree with you guys. I think it'll get resolved. Um, hopefully over the next few. It's just ridiculous. You can't be like the founding team and be like, I'm actually going to build out a separate product, keep 85% of the revenue on that. Good luck. Like that to me seems like the stupidest thing that you can do. And to post this publicly and say, hey guys, make sure to vote for this after spending 2 years building out SocialFi on Polygon, I think that's ridiculous.
It's also not a good track record that like you can be told that there's going to be a TGE and like without even having too much detail behind what the project does, you can estimate with like a near certain probability that over 18 months, like the token's going to asymptotically go to zero, right? With unlocks, like until that changes, I think, and until there's like an actual token that after TGE has like a sustained bid, it's just going to be like the same thing over and over and over and over again.
But that's like until they stop making money on that, it's just going to be over and over and over again. And I think this cycle, they're finally stopping a bit. Like we'll see in the next 6 months, but as far as I've seen, it doesn't like tokens haven't been the ones with big unlocks haven't been performing that well. Like Celestia is the best example of this. I mean, they're still up like 400x to be fair, so not that bad. But all right, switching it slightly. This will give Felix a chance to show his private market stack. I want to talk about stable coins.
Hey, I didn't even give the tickers. Come on.
I want to talk about stable coins, and I want to talk about what we think stable coins look like in 12 months, because I honestly don't have any idea. And then apart from that, I also want to hear stablecoin exposure ideas. Who wants to go first? Ryan, can you go first?
Oh yeah,
Felix, you can go first.
Okay. I don't know. I've been thinking a lot about stablecoins in terms of just its TradFi representation and what's actually like different versus now. And yeah, like what are they? They're digital global versions of money market funds where they hold either T-bills or repo or other cash-like equivalents like that with a yield. And the magic that happened is over the past 4 years, we went from ZERP era to 5%, and wherever we're at now, 4.5%. And yeah, it's a really interesting situation. I'm curious as we talk about the regulatory environment for these, but we're going into this world where stablecoins are owning like I said, mostly T-bills earning 4 or 5% every year, and none of at least the widely accepted ones like Tether and USDC, the big ones, provide any of that yield to the asset owner. Obviously, if you have USDC and you have it on Coinbase, you can get a percentage of that or something, a fraction of it. But overall, like the big game is that they're making a ton of money because they get to keep the entire yield. And it's quite similar, obviously, to banks where traditionally, you're supposed to provide an interest rate to your bank deposits, and then you just lend on the long end. But that's always a risk because the bank deposits have an option to be withdrawn and brought to money market funds and earn the full yield there. Whereas here, if it's global stablecoin holders, they don't have access to those type of facilities. So effectively, it's just the cost of doing business for being able to have global exposure to US dollars without being in the US and without going through those traditional like Swift rails, et cetera. So in the meantime, it creates this really interesting environment where the stablecoin issuers like Tether, et cetera, make a ton of money because they get to keep the entire yield. And now it's even getting to the point where I think I saw in the Genius Act that they're making it so that having any sort of yield on a stablecoin is not allowed. So that's just basically formalizing the idea that these issuers just make an absolute shit ton of money and cannot even pass it on to their holder base. And that's just an insane value proposition and business model considering the little like cost expenses associated with that. Obviously, we can get into the macro side of things of how I think about that as being a buyer of debt, but yeah, it's a phenomenal business model, and I think it's great overall for like the U.S. dollar reserve hegemony. It's going to make U.S. dollar reserve currency even stronger. I hosted a panel at DAS with the Austin Campbell, who's big stablecoins guy, and he thinks that every other currency is going to be gone within 8 years, and it's just going to be some derivative of US dollars. So yeah, interesting times.
I love that. The kind of a mantra that we've said internally is that crypto accelerates dollar dominance. that is a very cool tail outcome. Like it's obviously like exporting dollars into other countries via regulatory arbitrage over the internet is really, really cool. I don't think anyone's kind of there are national defense implications that come from that, right? Like countries do not want that to happen. I think that that's super interesting.
So one thing I wanted to bring up is like I am like incredibly bullish on stablecoin propagation. Like if you told me 10x is total market cap in the next 2 years, I'd believe you. Um, I just think like once you get to the point where you have mass utilization like that, to your average person who's not crypto native, the idea of spending money, whatever, via gas fees, whatever, to send dollars is going to seem very, very weird to them compared to like Cash App, Zelle, Venmo. Like that friction seems very unnatural to me, and I'm not sure how people can kind of rationalize that. And that's one of the reasons I do kind of think like down the road, Bach's going to kill me for this, that banks are going to kind of take over like native stablecoin issuance and just build this into the back end. And it's just going to be like Venmoing someone or Zelling someone on like a private blockchain. And they're going to, just hide the cost from the user. Because to your average person, like telling them they want to send USDC on Arbitrum when gas fees are high and it costs you $4, like it just doesn't work. And I just don't know how people are going to like rationalize that.
No, that's very you're kind of teeing up Felix for the plasma pitch
You're,
right
you're,
now.
you're, yeah, I'm literally fighting for my life not to show my bags here, but I'm not going to do it. But there's things out there where there might be
Yeah.
gas-free transactions. I don't know. I've heard about that.
And
Well,
like another, sorry, go ahead.
no, I think it makes a lot of sense. I think we said on a few pods back, maybe it might have been as far back as 6 months ago, but like the checking account, savings account, and like transferring money flow from one thing to another and seeing some friction there is a very familiar consumer flow. And in that context, it makes sense for there to be private L2 type things where you would do your transactions and then the investment activity happens on like Solana base layer or something like that. Like they like the Ethereum actually got it the reverse, right? They wanted to push the general execution to the L2s. Actually, like payments and non-contentious transactions for state that don't need to be like hyper optimized should go to that network, and then you keep all the activity on the L1.
Yeah, you can do gasless on Plasma. I'll show it for you, Felix. Plasma has gasless transactions. Also, Base has USDC transfers. I think it's free gasless, right, Danny?
Yeah, they're doing a lot of things. I don't know if they're all gasless, but I know that they have like some SDKs where you can, if you're an app builder, you can set up subsidized transaction fees for your users. So obviously, if you're the business operating there, then that would be the ideal end state. I think they're laying out the framework there, especially with allowing fees to be paid in any currency as well, like breaking up the like paying ETH for these gas fees and doing it in any currency for these. If it's protocols or if it's institutions that are going to do that for the sake of their users behind the scenes, it just makes a lot of sense.
The
I want
bank
to hear.
idea.
I want to hear James's take on Ethena because we're talking as we evolve more into more DGen stablecoins. Like, do you even think of it as a stablecoin? Because I know, like myself personally, when I see something like that, it's like okay, it's a structured product of a basis trade together that's super easy, and I'm like, sweet, I like that as a product. The part of it being a stablecoin that's tied to that, there's potentially is raw with issues. Is it even a stable coin? But just on its own, I'm really excited about. But super curious about your take on it.
Yeah, we chatted on this before. It's super interesting. Like the first thing that I thought when it came out was like, wow, this is like super cool that someone can invest in this basically hedge fund strategy on chain. And then like if you guys remember, as soon as it launched, there was like the hey, it's a stable coin. No, it's not a stable coin. It's a stable dollar, which I think is what they finally settled with, which is interesting. Um, so like my main concern with Athena is again your comment of you're basically taking a hedge fund strategy and you're saying the equity invested in that strategy is as good as a dollar, which like I don't think is true. I don't think it's right. um so you look at like borrow lend markets like Aave, where you can post USDE, borrow USDC, and then just loop that like 6 times over, right? And in many instances, a lot of these markets are actually just coded to treat USDE as if it's a dollar, which is like, I think on its face a little nutty. Um, And the interesting thing about basis trades is like because they're so levered and they're so recursive, no one really knows exactly how they're going to operate under like extreme market stress. And I don't mean like the market selling off like 10%. I mean like the market breaking entirely. So we chatted about this a little bit on the side of like the treasury basis trade, right? If we draw this analogy back to like TradFi land, and we shared the article of the Fed talking about, hey, should there be an emergency facility for this hedge fund basis trade, which we don't really need to get into like super detail of what that is, but it's not super dissimilar from Athena where you're shorting a future and you're long the spot and you're collecting the basis in between that. So I think the real danger there is just pretending in a borrow lend market that is worth a dollar because it's worth a dollar now. Um, yeah, I think we've not seen anything remotely like March 2020, for example, within crypto world. I'd be curious what you guys think would happen in that scenario where you have to actually unwind Athena. It obviously did pretty well in August. There were no hiccups at all. But I think that was a pretty mild event, to be honest.
I mean, to be fair, they did also survive the Bybit issue, but I guess that's not really that relevant to this. I think if Ethena goes down, Pendle would die. That's the big one, and Luke would probably be very, very sad if that happened. But that's the only
Well,
thing. Like this,
that's part of the issue, right? Sorry, good.
well, like you said, there's just a lot of exogenous risk. It's intertwined with everything, and it's only going to get more and more intertwined with everything because the product is growing and like it's a good product. At the end of the day, like they have a fantastic team. They're managing to get into like the relevant places. That's both money markets being used as margin on dexes, being used as margin potentially on sexes. And they just have like underlying, even like yield products built on top of it, such as Pendle. But that only grows it. I don't know how well it would hold up. That's kind of one of those things where you don't know until it happens, and then the week after, like, yeah, this was fucking obvious. We should have been more careful.
Yeah, to add, I was going to just say to add to it, the largest isolated markets on Morpho are dominated by Pendle instruments related to SUSDE, as well as just native like raw SUSDE and USDE markets. And like you said, James, like I just grabbed a random one. This USDE to DAI market is a hard coded price. So
Right, exactly. It's just one. And then so one other thing, I actually didn't even know we would talk about it, but it's interesting. Pendle, so Pendle, like you're trading interest rate swaps on Pendle, right? Like it's actually a fairly complicated product, but I think most people naively might not understand really what they're doing. And they just see like a PT product and like, oh, I'm buying free yield on the market. And like they have no idea like what they're actually trading or what is actually like going into that instrument and how to actually price that correctly. Um, so that's one
The
side of it. But then, sorry, good.
the front end tells you, man. It says it's 12%. I'm just taking.
Exactly, right? No, that's it. Someone just sees like, hey, I can buy this PT for 6 months from now. Like no one actually knows what they're doing, which is fine. Um, but yeah, like that also goes back to the point of like I have no idea, and I'm not sure if you can actually even find this information, how many like real actual dollars make up Athena, like on any borrow lend platform, versus just like endlessly looped and recursive borrow lend. Like I'd be curious if someone could break that down. I can't believe never spent a lot of time thinking about it in terms of how to actually find the data, but I would be interested in that.
Hmm. James, I'm curious, just as you brought that up, admittedly a Pendle noob, but when you talk about interest rate swaps, that is my wheelhouse. And within there, which side is fixed and which side is variable within that? Is the person that's getting the yield on the fixed side?
So if you're buying PT, so you're buying the principal token, so you're
Mhm.
locking in your rate for the forward future, right? So you're basically implicitly short that rate because you know what you're going to get at the end of the day, and then the seller of that is exposed to that interest rate risk.
Yeah, a lot of these lending markets have a lot of Pendle, like all of the lending market growth you see is a lot of it is Pendle, and a lot of it is usual money. I don't know if you guys remember that. It's not as popular as it used to be now, but Euler,
That's a
I
good
think,
hard coded one.
yeah, a large portion of Euler is made up um, of the usual bonds, and there's definitely some stuff that you can see like, oh, this could potentially crack if something went wrong. We should just But okay, I'm gonna defend the crypto side now because we're shitting on it a bit too much. To be fair, we've only had this for 12 years, so we still have the chance to make some mistakes. You guys had yours for 600 years, and you made all the mistakes that you get to have. Like, give us a bit. Like, we also want to run down some scams and some issues, you know.
We also want some French quants to blow some things up.
Exactly.
I think that the just like kind of one point to round it off is that look, the shit still breaks in TradFi. When you talk about the March 2020 market, that market broke. There were
Totally.
And that was a basis trade blow up there too, just in treasuries.
right.
Yeah, exactly.
Correct. Yeah. So I think in that environment, nothing is safe. I remember ETFs were trading at 10% discounts to NAV. Like shit was going on that did not make sense. That's a tough market. I will say that I am impressed with how crypto's held up this year. I think if you asked me in 2023, if we had all these products and then, ETH was down whatever percent it was from its high, 60% or so, how would these things be trading? And I would assume that we'd be back to 2023 kind of like bear market vibes, and we're not. So, glass half full.
All right. This is after that. I got kind of depressed, so I want to ask this question as well. What do we think wins in terms of how everything is going, how we know like the legislation is moving, the world is changing, crypto is becoming more legalized and regulated. Who wins, DeFi, CeFi, or Robinhood / TradFi? This is just such an obvious answer as well. This shouldn't have been a question, but I'm
trying to come up with a hot take for you, but I mean, maybe you guys probably already talked about this on a recent episode, but what happened with Hyperliquid and Binance and the whole jelly thing? Did you guys talk about that one?
We purposefully avoided it because I get really
Bach
angry.
avoided Hyperliquid. We talked about it before. I said include Hyperliquid, and he said no.
No, Hyperliquid.
Yeah,
we can talk about it if we want to. I'm very happy to talk about it. Like I'll say this: the team, the reason that Hyperliquid got to where it is through the HLP, through being aggressive in listings. Like nobody cares about listing fucking Bitcoin, Link, and Uni the way that GMX was, or DYDX where they take like 3 years to list and all. The people care about listings. People care about assets to trade. Now, with that, you can't make market makers bring in all of the liquidity. You need to have some form of a mechanism within the thing. And for them, that was the HLP, which suffered some losses because of. Is it the perfect system? No, they need to make some changes, specifically related to like open interest and market cap. You can't let somebody put on a 12 mil position on a 28 mil market cap token. That's ridiculous. But they're doing that. I still think what they did was probably okay. I assume everybody here is familiar with what happened, but what ended up happening is they set an Oracle price that was below the jelly's final price, and then just made everybody whole. As in, like they didn't take the 12 mil loss, which was what they had on their books on the HLP, by forcing the Oracle price to settle it. Was it decentralized? No, but like OKX and Binance are going after you, saying we're gonna list Jelly right now. I think you have to do what you have to do. It's not ideal, but
yeah. So Bach, the reason I brought that up is because it's a good outlook into this fight, because I'm not a decentralization maxi. I'm definitely more excited about some of the aspects of just like hyper efficiency of settlement and those parts of crypto. But I still appreciate decentralization to an extent. But look, like if what happened to a DEX where it wasn't just 6 validators and it was, I don't know, 100, like this would have been a way worse scenario, because obviously they had to get quorum, and they got quorum, I think, for the vote in like 6 minutes or something. And look, like I don't believe in Austrian economics where you just let everything blow up and then pick things up once from the phoenix emerges. Like I do think we can do better than that, and sometimes that requires a bit of a sacrifice in terms of decentralization. So yeah, I'm pretty happy with taking a happy medium. I think they did the best they could, and I think there is some validity in being able to have efficiency over absolute decentralization.
Yeah, I
Well,
think.
can you
Go ahead.
clarify 2 points? Like, as far as I understand it, there's two things that were kind of controversial. So one is like what was disclosed in their docs, which is like this kind of closeout concept
Yeah,
that they had in the first place, that they could even close it out. So I think it, like, from my view, there's two separate things. Like, closing it out is one thing because they basically just auto match the long against the short, even though like that liquidity was not there to like organically work out of that position, right? So like that to me is the first thing that they did that was, call it a little different. And then the second thing was obviously the Oracle at a much different price.
yeah.
So wait, did I kind of categorize everything correctly?
I think, to be honest with you, that doc thing is refers to the auto deleveraging. I don't think they auto deleverage. Like, I don't think they had like some ADL mechanism kicking. I think they just straight up closed the market at an Oracle price, and like you said, they just matched orders.
So to me, like closing out like force closing out that position at the current market price, I think is still a little weird, but I think like
Yeah,
doing that with whatever the 12 mil loss, I think that would have been like much more palatable to the market. I think like what people are having trouble digesting is that there was no loss to HLP, given that like that 12 mil loss to HLP would not have been catastrophic. It would not have brought down the platform. It wouldn't have like wiped out the vault. Everyone would have just taken like whatever 1 month, 2 month P&L haircut. So like why didn't they do that in your opinion?
I don't know. I now that you bring it up, to be honest with you, before I was very happy with what they did. I wasn't in the
Yeah.
HLP, but I thought it was a fine decision. But I do agree with you. I think at the time it was around 250, 260 mil in the account value. I guess it's not that bad. Like all time, I think they've made like 80 mil PNL. So it's not like it's a haircut. It's a few months,
Yeah.
more than a few months, but it's not the worst thing in the world. I think probably their justification is that this was clearly an attack and that people who piled on were likely also going for an attack. I'm not agreeing with like what they did. I do think that they could have probably done it a bit better. What they actually did end up doing is the price that they closed it at was like 0.07 originally. That was like the what people announced, and then they upped it for some reason. Like it was, they actually ended up making more longs. The people who owned the long side, they end up giving them a bit more than, I don't know if that makes sense. I can't explain it properly, but
Yeah.
they upped the Oracle price, so the longs were actually not all like fucked, but they some of them were in profit at that point.
I do
It's
think it's good
still,
that it kind of brings HLP into a little bit more focus because one, like, I think market making is like the ultimate dark forest, right? And then in crypto, it's even worse. So like people should know they're signing up to like play big boy games when they're making markets and decentralized order books. Um, and I can't tell you the amount of chats that I've been in where people are like, I'm just gonna sell everything and put my money in HLP and never have to worry about it again and get 30% a year. Like a lot of crypto participants think that HLP and market making is just like free money. Like they think
yeah.
market making is like this hand wavy thing where like you just make unlimited money, which I think this is a very good instructive exercise in showing that that is not true.
Crypto's definition of market making is so funny to me.
It's funny that you drop any product that can guarantee like 15% plus yield, and crypto people will say, no matter what the mechanism is underneath, okay, I'm going to take everything I have and just put it in there, and this will be
Retire.
guaranteed.
I will say one thing. I agree with you, first of all. Second of all, the HLP is also not a regular market making strategy. Like it's purpose built to make Hyperliquid have as much liquidity
Yep.
as possible. I'm sure that makes some form of a difference in their algorithm, like the way that they run it, because they're not trying to max profit. They're just trying to make the exchange work as liquidly as possible, because the money that they can make off Hyperliquid working well is dramatically more than the money that they can make off of um, the HLP. Felix, going back to what you said about the mix between centralized and decentralized,
Mhm.
I think we're gonna see more and more people get upset over the next year, like
Yeah,
especially big decentralization maxis. Um, like Hyperliquid, it's not 6 validators, it's 20 validators, but it's still way less than what we're used to. Like increasingly, we're getting more and more centralized for the purpose of becoming more efficient and faster, and like you said, settlement. Like we're just building it as sufficiently decentralized as possible, which is a
yeah.
forecasted term, but I
The
don't
the
like.
big the big thing that makes me sad is the Bitcoin's story side of things. just the disintermediation of spot Bitcoin from actual owners, and the increasing in derivatives. And I don't know if you guys ever read like Epsilon Theory, but a couple of years ago, the guy who wrote it, he wrote this kind of like in praise of Bitcoin, and really he was just about how like Wall Street has taken over Bitcoin and replaced it with like Bitcoin TM, like trademark, and it's just like derivatives of Bitcoin. And it's sad to see that, but at the same time, you have to follow the incentives, right? Like, I'm guilty of it. I don't own on-chain Bitcoin. I own IBIT because I can own in a tax-sheltered account and have tax-free gains. So it's like it's just it's part of the incentives. But it is also sad to see.
I don't think
Yeah,
anyone really cares anymore either. Do you
No.
guys? Like, like it's like Felix and I laugh about this all the time. Like people just sitting here cheerleading like more fiscal spending and more QE because their bags are gonna go up. Like I don't know. Like, can we just be honest? No one really cares about decentralization anymore. As long as like the price is going up, they're fine. Like
I will
if
say
you were to chart, yeah, go ahead.
I will say one thing. I got a bit sad at DAS.
For sure.
I'm like, people who know me know that I'm not like a huge decentralization guy. But I'm also like, I have some of the. I think people should be able. One of the reasons that I got in is because the country that I'm from, we don't have fantastic currency. So the holding the US dollar is incredible, but you can't hold it in a bank because they don't let you pull it out. So I think like that to me is very, very important. Apart from that, like you said, Felix, I think the idea of like owning a Bitcoin is different than owning a BTC ETF. But on the other hand, um, I am an analyst and I want to make money and I want people to make money. So like, if this is the game that I have to play, it's only fair. And that's why I think like people are gonna come into a shock when they see Fogo come out with like 21 validators and a permissioned validator set and no MEV allowed, and that's just gonna be the new reality. Like, increasingly that's what's going to start happening.
I
The
mean,
people
maybe
who
we can
gotta
be optimists here and just say that if people need it, it is there. Like, to your point, if you are in a country where you have like hyperinflation, like, yeah, there's some central banks there that are running some very high inflation, and if you need it, the off ramps are there for Bitcoin.
Yeah.
It's just for everything else, there's all those other things. And in the same way that there is permissionless lending on chain. It's just it already exists, so it is there. It's just it's not on the margin like where things are headed, I guess.
It's there too, and we actually found out that it's the dollar. Like what you're saying before about how we're going to export dollars to the rest of the world. Like, most people want them. Most people want dollars, and the escape actually doesn't have to be something complicated like Bitcoin. Like, you could have the currency of a country that has a very predictable and stable rule of law, and that's actually perhaps better than a Bitcoin, right? So, again, glass half full.
Imagine if you could have a dollar blockchain backed by Bitcoin as an L2. That would be really, really cool.
You're speaking my language, man.
All right. Let's do. I want to do one last question. I'm gonna do this one because Ryan Connor hasn't participated a lot, and neither has Danny. We're gonna do Pumpfun and meme coin return distribution. Specifically, I want to say once again that I was right and Ryan Connor was wrong. Pumpfun revenue is down. Increasingly will continue to be down, and returns distribution doesn't matter. People are constantly losing money. There's nothing to do with this. Ryan, any takes?
This is a chart
Yeah,
crime.
yeah, total chart crime. I think that if you're to go back on various 0x research appearances of mine, I've said a lot that pump fund revenue will go down 90%, or trading volume will go down 90%. Like, I think that goes without saying. I think the more relevant question is like, where is pump fund positioned in the crypto ecosystem today? And that what Pump's revenue was at daily, it's gone down probably 75% if I'm eyeballing the chart. So has Aves, so has Aerodromes, so has Uniswaps, and Pump Fund remains a top 5, mostly top 3, and often number 1 app by daily revenue. to this day in crypto. It's generated twice as much revenue as Base has since the Libra collapse that Pumpfun experienced. So this is still the most popular application in crypto by many measures. And that wasn't the case for NFTs, right? NFTs fizzled to becoming irrelevant on a relative and absolute basis, whereas Pumpfun remains relevant on a relative basis to the rest of crypto. So I think that this is a product that has experienced the most PMF of anything in crypto outside of centralized exchange trading. And my bet is that I would expect. I think I think you can reasonably. I would take a bet that pump fund volumes are higher in 12 months or are at new all time highs within 12 months. And I think zero people in crypto are taking that bet. It's just me and Danny. That's it.
I'm going to agree with Ryan here. You look up the DeFi Llama top apps by revenue, and the top three are Tether, Circle, Tron, I guess, and then Hyperliquid and Pumpfun. So I think everyone should be clear about like what the most popular and successful apps of the past year and a half have been. I think it's a bit silly to, like you mentioned, have the single like chart crime data point of like, well, it's down 90%, it's over. It's like everything is down 90%, like Ryan said. That's not really like an exclusive Pumpfun thing. And I, this one thing that I really, really hate is this NFT of 2021 to meme coin of 2024, 2025 comparison, because meme coins existed in 2021 and they also existed in 2014. Like, this is a sector that's been around almost as long as Bitcoin has. And yet we're going to like cherry pick it and compare it to NFT markets for some reason. When, we called them different names. They were Ponzi coins, they were shit coins in 21, and like 2017, like maybe you called them like weird altcoin ICOs, but those were memes too. Like it was essentially the same thing. And I think if I'm probably one of the few in the West anyway that was using Binance Smart Chain in 2021, but I think if you were around for that era, it was incredibly obvious that like meme coin trading was like kind of an undeniable trend. And you saw that in the massive growth in new token creation on BSC relative to ETH. And then when Solana came around and they, lowered fees and increased throughput by another magnitude, you saw that same jump with, I mean, first it was just memes generally, but then, Pumpfun really just like turned up the notch there. So I've just not been surprised here by this trend. And I'd agree with Ryan, like, maybe the game needs to be tweaked a little bit. I think that's always up for discussion here. But the two popular examples that I think people give, Trump token, if it's Kelsier Ventures, and Melee coin, those weren't pump coins. So it doesn't really prove the point that the like mass extraction events are like a pump problem per se. There are problems for sure, with if it's bundling tokens, etc. And maybe we need to find some solutions for those things. But I don't think like the behavior and like the market itself is going to zero.
And I think like I use this heuristic to think about things like if you ask me the three crypto companies that I would want to own equity in, it's Tether, Binance, and undoubtedly Pumpfun. Like, and I think anyone, like, regardless of your thoughts on meme coins, like, you're lying if you say you wouldn't want equity in that
Yeah.
product. Like,
No, I completely
who
agree.
cares if meme coins are stupid? Like, there's just been nothing that produced that much consistent revenue. Um, I really would say, like, since the beginning of crypto, like, it's just kind of like not arguable at this point that like it has found PMF. Um, yeah, I hate meme coins. I think they're terrible, but I think Pump Fun is like going to be here forever. I think it's undeniable.
We get like, we have the rev charts and we have the fee charts and revenue market share. And, you look at, the yellow on the chart, which represented Binance, and on a daily market share for chain application revenue, it was down to 2% in November, and then it shot up to 20%. So of course, we have questions. What the hell caused this? If they have a 4 dot meme. It's a meme coin launchpad on Binance. Like even when the revenue isn't being generated by Pumpfun, it's a meme coin launchpad in some other ecosystem.
Yeah, and I think to your point, James, like when I look, we use this example all the time, but like when I look at sports gambling trends, for example, sports betting, it's like you can look at that market and be like, wow, they're really just extracting money out of the hands of people who have nothing better to do and are probably on lower, income deciles of the population. But, you can hate the fact that that exists and that people love to just waste their money on it. But the fact exists that it's very profitable and it's successful. So that, like, I can't really argue against that.
Yeah, and I think it's just an ideological thing in crypto that people they think it's too dumb and it's too stupid, so it has to go away eventually. But like you kind of just have to approach this of like, I hate the cliche of like, do you want to be right or do you want to make money? Right. But I
Yeah.
think this is just like exactly one of those things. Like it's clear as day, it's sticking around.
100%. And yeah, Danny, I'm definitely guilty of doing the NFT comparison. But the more I think about it, it is like super revisionist because people seem to think that in 2021 the only meme was SHIB, but it wasn't. Like, and even some of those NFT people were doing shitcoins. Like I remember there's like a couple like Rug and like there's a couple of those like that. It was the exact same situation as today. So that's a valid point.
The revisionist history is crazy. People forget that like
Yeah.
Safe Moon happened and went to like 15 billion FDV. Like, SHIB and Doge were,
Dumb
50. They were,
rocket.
top 10 coins, right? They were insane market caps. Yeah, all
Yeah.
the Elon coins, all the Inu coins, they were going crazy.
Yeah.
Yeah, that's a fair shout. I guess I'm wrong. Um, I can't. Everybody disagreed with me, so I can't go again. I will say
Oh,
I agree with you, James. I've thought about it a bit more. Like I've been thinking about this, and I realized that some of my anger might stem from the fact that I can't buy the token. Like there's no token to buy. So if I could buy a token for it, I would probably not be this angry. I would just be like
If
I
there's
also
one
hate it.
protocol yeah, go ahead,
So go
sorry.
ahead.
I was just gonna say if there's one protocol that should have TGE'd like 12 months ago and like probably would, you know exactly what the chart would look like, right? Like you don't even need to say anything.
Yeah.
And like they could have designed some clever staking mechanic to like, receive a share of fees and that would have been like the greatest wealth generation of this entire cycle. And I'm sure
Yeah,
it'll
but
happen at some point.
I will say instead of that, they focused on shipping and just destroying radium. And now that
Yeah,
radium's
that's true.
getting destroyed, they can launch a token and take that market share.
Yeah. Also, without a token, they made 800 mil over the past
Yeah,
year,
that too.
and stole
Yeah,
and
it's like the most
just sold.
successful crypto company of all time, right?
yeah, it's the same argument as like a lot of these trading bots that basically profited on meme coins as well that didn't launch tokens. They printed hundreds of billions. So I don't know that they're really crying about not doing
Yeah.
a token.
No, definitely not. Yeah, this was the same view I always had with Solana. Is like I don't like Solana, like from a ideological place, but it was what to own, like instead of ETH for the longest time. So, but I could be happy with Solana because I owned it and it was going up. But with Pumpfun, I can't be. So hopefully they'll change it soon. Okay, fantastic, guys. Is there anything that we didn't cover that you really wanted to cover, or can I end it?
I just want to hear one last hot take from James on something. Just have a
Jeez,
rant
putting me
on
on the
something.
spot. Have a rant on something. God, I don't even know what we covered all the hot takes.
You always know what to
We
I
rant
can talk
about.
about undercollateralized lending.
Quick,
Yeah,
Bach,
we
list
should
off
do that.
all of your bags so he can
Yeah.
draft up a quick bear thesis on them.
I'll do that.
Okay, my,
But
my my hottest take will be I think because we didn't really chat on this that much. I think Robinhood will dramatically eat Coinbase's lunch over the next like 2 years.
that's not
And
hot take. We all
uh,
agree. I agree.
okay, fine, more hot take. I don't even think crypto exchanges in their current form will exist in the next like 3 or 4 years, and I don't think people will be trading on Coinbase. I think they'll be trading on some sort of like yet to be formed NYSE version of crypto. And like the entire concept of like trading on separate venues that also hold your coins is going to be, you know,
Hmm.
the old biz. That's a hot take, just off the top of my head.
But not just going towards like it all being on the New York Stock Exchange and trading through brokerage, like something else.
No, no, like an actual like you won't be able to you won't have to separately market make on Kraken versus Coinbase. They'll just be one
Okay.
exchange, and then you'll
Hmm.
handle your custodial relationships off chain and settle off chain, or sorry, off exchange on chain. Yeah.
I think that makes sense. God, I can't wait for Coinbase to not do well. They're just. I don't like Coinbase. I've never liked Coinbase. People get angry at me. I should probably not say that out loud, but
I do find it funny that this has become more common, but I feel like the community really rallied around Coinbase like at the bottom of the prior bear market, and then now everyone loves to shit on them because I don't know, I think they just look at the business and they're like, man, it's an awful service for users.
I'm mad at them because they still charge $400 a trade. Like, it's
Yeah.
absurd. And I pay them a monthly fee. And then they tell me that they saved me $300 on that trade. Like, you got to be kidding me.
Yeah, Buck, if you have 5 more minutes, can you actually pull up the chart we sent earlier just to chat on that? Because that's actually a serious point that Ryan brings up that I actually think is interesting. Of
All right. The Coinbase thing.
yeah, 2
I
minutes.
will. Yeah, I have all the time in the world. I just thought we ran out. All right. I'm gonna. Oh,
It's those two charts.
there we go. I have one chart here, one chart in the other one.
Yeah, it's
One
fine.
sec.
So like to Ryan's point, like if you look at their Q4 revenues, right? In full year 2024, so they did basically 80% of their volume was institutional, and the revenue side is like totally flipped on its head, right? So like 3.4 bill on consumer net transaction revenue, and then on their institutional revenue they only made 345 million bucks. So like it's a trend that's just like completely going the wrong way. And to Ryan's point, like how sustainable is it in like a business where margins are going to continue to get compressed? Can they extract that much from like the consumer retail side of their business on transaction fees? Like I'd be curious what you guys think. I just don't know how that's sustainable like 5 years from now, or if people are still gonna like accept that pricing from Coinbase.
I might have a weird. I'll just quick one. I might have a weird view here, but I think Coinbase has been relatively slow. I mean, more recently, Q1 post Trump and election, they've kind of ramped up the like shitter meme coin listings, which
Yeah.
is where I think you can like really pull the handle on how much you're getting out of a trade from these retail traders. And I don't know. I expect that they can grow that consumer side just by getting more assets like that on the exchange. But to your point around the institutional trends, yeah, someone else feel free to chime in.
I'll take a different route here and just mention we got that rumor a couple weeks ago that Coinbase is looking to acquire Deribit, and I think the options side of thing is very compelling because I've been a huge hater of on-chain options basically since they've begun. Because being somebody that used to trade options and not doing very well at it, but I gave a lot of fees to market makers, and just like looking at those spreads was horrendous. And I think cornering the one place where you have decent spreads on crypto options is going to make them a killing if they go through with that. It's one of those things where you just think about the amount of different variables of like all the different strikes, all the different expiries. To have tight spreads on those is you can only have like one place that really does that effectively. So if Coinbase can get that, I think they can still survive pretty well.
It's a weird one. It's just like I'm like very much a capitalist. I think if you can charge a price, you should charge it. However, I think it is very unkind to be charging the fees that they charge, and it's not cool, man. Like, that's my take. I just like, what the heck? Why are you doing this to me? Like, we're on the same team.
I'm a capitalist
So
until it doesn't
that's my
benefit
take.
me.
To be fair, you're locked in New York, right? Like all of the better service
Yeah,
offerings are not available to residents.
yeah. It's actually a New York bit license problem. But Coinbase is not, not taking advantage of it. Let's say.
Yeah. Danny, I agree with you in that they were very, very slow to list everything. And I imagine they missed out on quite a bit of volume. I'm not sure why they did. They didn't list any base coins, which would have been fantastic for them. They waited
Up
until
until
now and they
recently,
did.
like
Yeah.
past few weeks, and it's like dog and me and this, that, and the other thing, right?
Yeah.
But I'm surprised they weren't faster about this. Like it wasn't surprising to see post election all of these exchanges like, okay, we're dropping the whiff coin and we're dropping this, that, and the other thing. That was expected. I was surprised that they took longer to get their ecosystem
Yeah.
assets on the exchange.
I'm curious if that was because of whatever, like them being in DC and trying to show like good face and trying to act right. On the other hand, Deribit, Felix, that's the only options exchange in crypto. Like there's nothing else. So that would be pretty big. Base, I assume, makes them quite a bit of money as well, and will probably continue to make them a lot of money. Um, but I don't know about the fees. I don't use Coinbase. Um, But I will say I've increasingly seen more and more complaints about Base holding people's money. So that's the only reason I don't like them. Is like they ask for 15 KYCs after you try to transfer some money around. So that's the only reason. Let's do under collateralized lending, and if it could ever work in crypto, and then we're gonna end it up.
Yeah, I guess we can keep it quick. I mean, I kind of think it has to, right? Like for the industry to grow, like if you ask people, like the backbone of capital markets is like at its core unsecured lending, right? It's corporations floating debt that's not secured by physical assets. Um, like you can't have a credit system that's over collateralized and continue to scale exponentially. So we chatted like a little bit before about Wildcat, which I think is pretty interesting. Right. So like they have a couple under collateralized pools now with Wintermute, CMS, and Selene. Um, like I think it's probably a little bit better, I mean a decent amount better, I should say, than the old CeFi lenders of like 2021, where, you know, I think the idea there was actually probably pretty decent. They just, screwed up the entire concept of having overnight withdrawals by users, which like to anyone should have been blatantly obvious that that's not going to work. So Wildcat has a pretty interesting solution where, the tenors are a bit longer, so you're locking up your money for a couple months. I think that's pretty interesting. Now, granted, it's like super, super small. I think you have the slide up with their current market. Like we're talking under like $100 million of
Yeah,
current outstanding borrow. Um, but I think it's still like a little. It's close, right? Like we're getting there. I'm surprised more people haven't kind of taken a longer look at this in a bigger push. Um, Curious what you guys think about it though.
I'm gonna say I think until the markets are pretty small. 14.4% is not bad, but like you're gonna go into that thing about how it's not free money to give money to market makers, so it's gonna make me upset. But
Yeah, I actually think these rates are too low. Like, I actually think lending to Wintermute for 12% uncollateralized with no like legal recourse to them is actually very, very low.
Yeah.
Um,
and that's the thing, right? It's the legal recourse aspect. Like if something goes wrong, there's no guarantee for me to get it back. I'm just a wallet address. I don't know
yeah,
how even it would work. I'm sure Lawrence and the guys have figured out some way, and I'm sure that Wintermute is good for their money, and so is CMS, and so is Selene. But it's more about like, what if something goes wrong? And that's something that I never know how people are going to fix is on-chain credit. And I think it might just have to be legal. Like there's no way else to do it. Like you either have to have collateralized lending, put up some assets, borrow on that, or you need to do some form of like tie somebody's address to their KYC and figure out some form of legal recourse, because there's people who are trying to figure it out. Like you give somebody on-chain credit score based on like how many transactions they've made and if they've paid them back. But to me, if there's no like, if you give people money to steal, I think they're just gonna steal it, or if they lose it, they're not gonna pay it back.
Yeah, I think longer term, this feels like something that's a bit of an inevitability. And it's just like from here until then, the question mark is all the things that Bach just mentioned. Like, I think we're just going to have to step through all of those things. There's not going to be any free lunch of like, you can just spin up a wallet and get a loan under collateralized. Like, that just, there's no world where that happens because no one's going to want to give away their money for free with no recourse. But yeah, I think there's like a multitude of solutions that are going to come, and I think we're seeing like in other areas things that might bridge this gap where like Coinbase on Base is experimenting with like permissioned pools with Uniswap v4 hooks. Like, there's going to be ways to do permission setups for these types of things, tie people's KYC to it, especially if you get to the point where, if more of these TradFi institutions are going to be linking, on-chain systems into their backends for stuff. I mean, they're going to have their customer data anyway. So I just feel like this is it's a problem that gets resolved, and it won't be sexy when it happens.
Yeah. I feel like the best focus we could do is just around transparency and the rehypothecation of those loans. Like when we get to that next step, where if we get enough of these under collateralized loans, like that's the big thing about the issue about these and TradFi is just the rehypothecation and like you don't know your counterparty. So I think the best job we could do using the greatness that is blockchains is improving that fact. And, the credit worthiness and all that stuff, that it'll get figured out. But I think if, Wildcat, if you're listening, that's a really good thing that we can improve for broad financial industry, I think.
I think they'll figure it out. We'll see.
Yeah.
Just on that last thing is, even in crypto, you see market making deals go really wrong, like with the token teams giving tokens to market makers and those deals going wrong. So I think if that deal is going wrong and there's no legal repercussions for it, even though there are like legal contracts, I imagine we're relatively far away from.
Is that a dig at movement market makers?
No, that wasn't a dig. I didn't even think about it, to be honest. But yeah, I guess kind of, unfortunately.
I will say, Felix, I do like your point about transparency. I think more and more the kind of the ethos of having these transparent, well, what could be or should be transparent, sometimes the data isn't like resolved to that level for people, can bring around a lot of the, at least provide all of the data, put it all in front of people to make the right decisions around how to build some of these things or like interact with them. And I think there's an interesting comp in like, even in governance systems where like on Solana, people are able to sell their votes, like literally.
Yeah.
You can sell your votes to other people during governance votes, which, right or wrong, the social consensus can decide. But I do think there's a point to be made about just like, if that's happening today in the traditional world, like you don't know that it's happening. It's not happening on chain, right? That's a backroom deal. Somebody's shaking some hands, paying, some quid pro quo, doing some services for this, that, or the other thing. The more that you can kind of put the data in front of people to say like, this is what's happening, how much we know it to this extent, then, the social decision making can happen around that to decide what's the best path forward.
Thank you, Danny. All right. Guys, before I end it off, I have to say one thing. It's in my contract. Please come to permissionless and use code 0x10 when you come. You get 10% off your permissionless tickets. I will be there. Danny will be there. Felix will be there. Ryan will be there. James might be there. We'll see.
He might be there. He'll be wearing a mask.
I'll be there.
Man, you're already shilling that. Hey, I haven't started yet in 4Grind, so I got to get on it.
Well, you have a lot more listeners than we do, so we have to really work for it.
I'll give you a head start.
We shield 0x10 round the clock, man. Every episode.
Yep.
Respect. That's good.
Literally around the clock. We did this in the morning as well and shielded it. Yeah, we're gonna have a 0x research event as well this time. So we won't just have to crash Felix's one. So it should be fun. 0x10. Guys, awesome. Thank you so much for coming on. James, it was a pleasure to have you.
Thanks, guys.
Yeah.
Ditto.
That's sweet.
Later, guys.